Hello everyone. I'm doing a problem um, from chapter 12. It's 11a, and it's dealing with statement of cash flows. And so let's begin. We have our statement of cash flows here, and it was for Oriole Company for the year ending in ended December 31, 2017. And we're given this information, the comparative balance sheets, and we are to determine or to prepare a statement of cash flows for the year using the indirect method. And so we have to convert do some converting and use this additional information to do that. So we always begin with cash flows from operating activities. And then we're given the net income here from the problem. And number 4, net income for 2017 was $48,507. So we just enter that in. And then we're going to do the adjustments to reconcile net income. So we have the net cash provided by operating activities. And then we begin with the depreciation expense. And we're given the depreciation expense and the additional information. It says right here, operating expenses include depreciation expense of $55,062. So we just enter that in. And it says we need to do the loss on disposal of plant assets. We figure that loss because in 5, in the last part of 5, it says, in addition, equipment costing $28,842 with a book value of $13,110 was sold for $10,488 cash. So because there's a difference here, it was sold for less than the book value, we have to account for that loss. And that loss, because of our rules from the chapter, gains are subtracted and gains are deducted and losses are added. We are going to add that to cash. So we get the value of $2,622 by subtracting $10,488 cash from the book value of $13,110. And you can see that right here. And so then we're going to do the current assets and current liabilities. So we have to determine whether they are increased or decreased from 2016 to 2017. And we find down here, if we look down here, we found the changes here, whether they were increased or decreased. And we also have the accounts payable, the current liabilities down here, and then whether we add or deduct them from cash. And so we found that cash was increased by this amount from the years, the 2 years. Accounts receivable was decreased by that factor. Inventory was increased by that factor. And prepaid expenses was decreased by that factor. And accounts payable was also increased. So what we did was, because a decrease in accounts receivable, because accounts receivable is a current asset and it was decreased, we know that it's going to be added to cash. So we added the $10,488. The increase in inventory, because inventory is a current asset and it was increased, we're going to subtract or deduct from cash. $12,389. Prepaid expenses was decreased, and so we're going to add the $7,499 to cash, and there was an increase in accounts payable by $11,445, and we're going to add that to cash. And so we get the total here of the sum of these, $74,727. And then we get the net cash provided by operating activities by adding the net income to the sum of these adjustments to net income. So we get the total of $123,234 as the net cash provided by operating activities. Going down to cash flows from investing activities, we sell some land. It talks about that. Number 2, land was sold for cash at book value. This is the one issue that I had with this problem, but I was able to figure it out after the fact. Land does not depreciate. And we began with 2016 with the land being valued at $170,430. But it talks about in here, it says 52,440 shares of $1 par value common stock were issued in exchange for land with a fair value of $52,440. So what you have to do is you take the initial value of $170,430, you add the $52,440 to that, and then you subtract the current value of 2017 for the land is $190,095. So if you do that, you get a total of $32,775. And because we're selling this land, or selling, our land and equipment, these are positive values. When we purchase equipment or land or plant assets or whatever, we subtract or we deduct. So we did purchase equipment. We sold some equipment. That we talked about that earlier. We sold it for $10,488 cash. So that's that value there. Then we also purchased some equipment, $120,612 cash. And so we subtract that, and if we add those together, we get the net cash used by investing activities to be negative $77,349. And when we add that value to our net cash provided by operating activities, we get, well, let's not do that yet. Let's go down to cash flows from financing activities. So we know from the additional information that number 3, the cash dividends of $15,732 were paid. And because that is, we're paying a cash dividend, we're subtracting that from our retained earnings, basically our cash, and so it's going to be a negative value. Just enter that there. So in order to find the net, it is a net increase in cash when you add the net cash provided by operating activities and the net cash used by investing activities, and then this is be the net cash, I guess, used by financing activities. If you add these 3 numbers together, we get a net increase of $30,153. Then we add to that the cash at the beginning of the period, and we determine that from the beginning, or the value that we received from the problem for 2016, which is $58,995. And when we add those 2 numbers together, we get the cash at the end of the period, which is $89,148. Now, we do have this non-cash investing in financing activities. Since it says down here, since we issued an exchange for land, our common stock was issued for an exchange for land. We just multiply the number of shares times the par value, and we get the $52,440 for the non-cash investing and financing activities. All right. If you have any questions, please feel free to ask. Thank you so much. Talk to you later. Bye.